Yeah, it's nice that it's Friday. We're seeing a little bit of a good for the dollar. And I was telling people, um, we're seeing the dollar come up a little bit. We had a support from yesterday at 94.36, and that's where they went to. But I thought they were going to do it in the U.S. session, and they waited till the European session because I wanted to sell the euro yesterday when it got up to that 16.98. But I said I'm going to wait until it gets to 36, and then the euro. I think you ended up shortening for a little bit, and it did rotate lower about 25 pips. We finally made it to 94.36. Now we're seeing the dollar work a little bit higher, and I'm thinking, okay, on a Friday, maybe for the liquidation, but for bulls, they haven't done wrong buying the dollar. And I said this, and I didn't mean it facetiously speaking. We're probably, literally, they know that when you get that bid going into the U.S. session, it takes us about to the mid-U.S. session because we get some acrimonious tweets. So it makes sense. If we don't get those acrimonious tweets by mid-U.S. session, then I could probably see this dollar start to rotate. I don't think the wheels will fall off the caboose, but then at that point, because I really want to be selling any rallies back up here to 95. So if by mid-U.S. session, if we haven't gotten any acrimonious tweets, then we'll probably start to pair right back here with the cash dollar index. But that's about the only thing I've got. Only thing it is very important that gold defend the 1207, which was that breakout on the daily. We showed that from the prior day before, and that got things cooking. And here's 1207 on the December futures. There's that 1207 we had. And so we said, hey, this thing will go bullish if we get that daily close. And we got that daily close, and the market was open. And we ran out of gas at 1219, and 1219 is that same area we talked about a couple of weeks back. Let's pull this back. Here's at 1219 on the market profile, and we had a real nice volume area here, and that's where the market rotated back. So they ran out of gas at 1218, but I thought this was very disappointing for the bulls here. But it's important that they close a daily close and they defend that 1207, but I still like the 1204 area, and then for this market longer term to move higher still to 1245.
Sorry, I was just tweeting out our link to the webinar. Sorry, I'm half asleep. Friday. It's Friday. So you have the bias chart all done, correct?
Yeah, there it is.
Cool. Yeah, I was trying to put it all together. I'm like, I don't even know. I'm trying to think what I traded yesterday. I closed up a lot of my trades really early. I was done, and I got whipped around a little bit and gave back some of my profits yesterday, but I still had a very positive day, and I pretty much ended up hanging up my hat by a decent time. So as far as trying to remember and recall exactly what I did yesterday, and I'm not.
You sold the euro right close to the top, and then you ended up eventually covering, and I think you ended up going long the euro, which was a pretty nice.
I did. Yeah, that's right.
Yeah, I wanted to sell the euro, but I try to maintain my discipline and wait for 94.36, and I never got it. So I was kind of boo-hooing as I watched the euro slide lower. But you covered right near the lows, and you said you're getting long, and certainly the euro did move higher.
I did. I remember that actually, because I was I was joking that a lot of the things that I need to do, just for my personal life, they get kind of pushed under the rug. Like my emissions testing for my car, it needed to be done, and I got a warning from the Department of Transportation, like, your registration is expired. And I'm like, oh, I forgot to do that last month. And so yesterday was a perfect example of, okay, I made a little bit of money. I did all right. Gave back on a couple of trades. I gave back some, and I'm like, you know what? I'm just going to go to the emissions testing, get it done, go register my car, since it's, I got nothing else to do. I thought the market could be kind of quiet, and I was sitting at the emissions testing, and I'll show you guys what I was as I was sitting there. Thank God for mobile. For mobile trading, because a couple of years ago it wasn't even possible. So we were sitting here yesterday, and this the euro dipped to 116.70, and I picked up the euro 116.71, and when I stepped back in from there, when I got back to the desk, I sold it at like 85, and that was it for the day. I was pretty much done there. So yeah, I was long the euro, sold it, bought it again, then I exited it. I didn't short it. Or maybe I did short it. I don't know. Oh, no, I did, because it came up against this trend line. That's right.
You caught it right here at the top, because I was telling you after you shorted, I said, well, our buy chart resistance is 1698, and you got short.
And it was because of this downsloping trend line.
Yeah,
that's
you
right.
showed that in the chat room.
And I shorted it. Yeah, that's right. So I did. And I played it pretty well. Now, unfortunately, at that point in time, I actually. I have to think about what trade it was. I took a couple of small losses, and I was like, and I made some money in the euro short, but I took a couple of small losses. I think it was on gold, actually. Yeah, that's exactly it. Because I was long gold, and I picked up gold and silver. That's what it was. And as the euro fell, gold and silver really broke down, and I took small losses in those, made some money in the euro. And overall, net after the morning, I'd lost a little bit of my gains that I got from earlier and from the ECB meeting. And I said, I'm pretty much done. And then when I was at emissions testing yesterday, I picked up the euro for a quick like 11 or 12 pips right here, and then I was finished. I actually wrapped it up for the day. Now, as far as today goes, let's talk a little bit about. Today we have the retail sales. So, retail sales. One of the traders in our chat room, he was like, I expect the retail sales to be weak, and I'm like, man, I don't know about that. The U.S. economy, whether you believe it or not, and this has been the non-believers for the last I don't know how long, and arguments are, the jobs market. What about the, validity of the jobs market, or the not validity, the quality of the jobs markets,
Mm-hmm.
The higher paying jobs aren't here. People are working lower paying jobs, just to get by. Whatever the case is, our employment is full. Everybody's working. Everybody's working. Whether you're working the job that you want to be working or you are not, it structurally, I think the U.S. job market is actually in trouble longer term, because the quality of jobs, the quality of higher paying jobs are a lot less. Now, you wouldn't see that in the stock market, but I think as an economy, longer term, it is problematic. So, but also you have to think about human behavior. It adjusts, right? You're talking about a financial crisis that happened 10 years ago. I'm not saying that there's not going to be another financial crisis. There probably will be. I don't know what form it's going to take shape. I believe we're really long in the tooth as far as our recovery goes, and at some point here in the near future, we are going to start to feel some sort of pressure as far as economic downside pressure. Was it today? I don't think so. Is the consumer going to show weakness today? I don't think so. I think right now, if you look around, people are generally, our economy is happy and humming. I mean, and whether you like Donald Trump or not, he's been good for the economy. He has given people hope. The job market is strong. He has, and like I said, it doesn't matter whether you like him or not. He is doing a lot of the hard labor stuff. When I say hard labor stuff, he's fighting on trade. He's, going after China. He's going after Canada and Mexico. Whether or not you believe it's a good thing or not, overall, people feel that he is doing the hard legwork right now. I actually think it may actually end up hurting us a little bit longer term, but he's doing the things that it right now is giving us the feel good, and people are willing to, hire and employ people, and consumers are spending. Everywhere I go, and I live in a very consumer-rich area, and I live in a very economy-sensitive place. I live in Scottsdale, Arizona, or we're North Scottsdale, okay, and it's very consumer-driven. I can see the economy probably better than most. When the economy is good, people are out spending. There's a Bentley on every corner where I live. And I know when the economy is sucking wind, because all the Hummers get sold, all the Bentleys get sold. You see more, Honda Civics. It's funny almost, because of where I live. It's so sensitive. Like when things are good, I can see it's good. When things are bad, I can see it's bad. That restaurants are empty, no one's spending. I mean, it doesn't matter where I go right now. People are spending money. They're out eating. They're, consuming away, buying crap all over the place. All the stores are filled. I mean, that's just, and like I said, I happen to live in a place where I can see it pretty clear. And I know when the economy is bad, and I can see it when the economy is bad, specifically where I live, and I can see when it's good. And right now, and Amir said Blake's jumping on the Trump bandwagon Kool-Aid. No, it's not. He's just said that in the chat room. And hey, Amir, and this is our chat room, by the way. If you, this is all of us. And by the way, Benedict, I know you're listening in from the Carolinas. Hope you stay dry out there. But what? And there's Paulie even chatting. Hey, Paulie. You're chatting and you're talking to me at the same time. But what I'm trying to say is, again, whether you agree with Trump or you don't agree with Trump, it doesn't really matter. Right now, the whole economy is drinking the Kool-Aid, right? And so to bet against the American consumer right now, I don't know if that's the right thing. We're going to eventually start to see economic data sour, but I don't know if it's today. I sure as hell know that I don't like betting against the U.S. consumer. Every time I bet against the U.S. consumer, I get my ass handed to me. Now, and here, I'm going to put this back up here. We do have retail sales. Now, if you look technically, some of the things that I'm worried about right now on the euro dollar specifically is this failure here. This is a little bit concerning. If you're long the euro, you've got to be a little concerned about this. This is that trend line that I was talking about yesterday. We pushed up against it and we broke above it in European trade, and we've already rolled over. This is, and I know we only have 45 minutes left in this candle. This is what you call, here, let me grab a, this is a 4-hour chart, so just bear with me, okay? It's an intraday chart. Can't read a whole lot into it yet, but this is what we call dark cloud cover. You see these up candles here, up candles, up candles, up candles, up candles, and then boom, a big black candle. That's called dark cloud cover. If we close here intraday, we probably are heading back towards the lows by the end of the day. It would be my best guess right now, just from a candlestick analysis perspective. The other thing that I'm a little worried about is that we failed at this trend line. I mean, this is a false breakout, squeezed out everybody. Now we're rolling over. You go over to the cable, hey, we got a breakout in Asian trade. See that? Breakout in Asian trade. And what happens if we get a false breakout and we move lower? Now, if we break through 130, 60, the cable's going to get spanked. And I say that because we've had a really nice week. If you look at the cable, how we've performed this week, we've gone from, let's say roughly 129 to 130, 150. I wouldn't be surprised if we gave up another 30, 40, 50 pips from here in the cable by the end of the week. I mean, you look at the daily chart, you got the, nice little rally. Everybody's got nice and bulled up. You got a lot of traders got squeezed out of their shorts. How about if this thing rolls over? It's possible. Aussie, this is a really big rejection yesterday. Look at that big pin bar yesterday. If you guys were, by the way, trading the Aussie like I was the last couple of days, I'm going to just draw this out for you. We had shoot, I'm going to draw it with actual lines here. I'm going to use the chart. We had a really nice bull flag pattern. If you're using ForexAnalytix, you knew this, okay? We had a bull flag pattern, look like that. We completed it almost to the pip and then reversed yesterday because that Trump, or there was a tweet regarding China trade, not going so well, blah blah blah, and it reversed yesterday, right after we finished that bull flag pattern. Right, I'm just giving you roughly what happened here. I mean, then you take the Aussie, and then you got a little bit of a failure here. You have failure at horizontal resistance. Couldn't break through this previous support. Oh my God, what just happened? Holy cow, what just happened? Pound is ripping right now. What just happened? Sorry.
I'm looking, but I can't see anything.
German Chancellor Merkel, we want good relationship with Britain after Brexit, and
Yeah, that's the headline.
that was the headline. Okay, so
This is the same headline that ran it up last week, and then Germany did a 180 and said, "Oh, we backed the ECB." So once again, just susceptible to these headlines.
Wow, I mean, just all over the map. And look at the pound slipping right back down. You know what? I am going to.
Done.
Oops. I just got out of my pound yen. I don't even want to deal with that. I actually took some money off the table. I was short the pound yen. It just came right back down. I just closed it. And I just took my profits off the table. I actually made 7 pips. What a nightmare. Damn, these stupid headlines. They run these headlines like, anyway. I probably could have ended up making more money, but I don't want to deal with those headlines. Not today. Especially when I was just up 30 pips and then just a moment ago, and then it just rips up like that. My stop is at 147. Well, it was. Ooh, let me make sure I don't have that on anymore.
Some more headlines coming out. U.S. Brexit Secretary says, after call with Barnier, we reiterate our willingness to devote the necessary time and energy to bring these negotiations to a successful conclusion.
Here, I'm giving you Bloomberg headlines. Reiterates willingness to devote necessary time and energy. What's that supposed to mean? Yeah, of course you're going to devote necessary time and energy. Merkel says progress lagging on foreign nation talks with Ukraine. Okay, that's not it. Differences remain, closing in on workable solutions. Says substantive differences in Brexit remain statement. All right. Well, you know what? Like I said, I just took 7 pips and I had 30, and my stop was at 147.20. I think it was 147, wherever it was, 147.24, and I just canceled it. So I just canceled it. I'm out of the pound yen. I'm not even dealing with it. Anyway, damn, I was hoping it would go the other direction. Damn, these headlines. It's really, trading the cable is really hard. I mean, it is sure is tough right now. It is very susceptible to those headlines. And I mean, I was literally up 30 pips, down 40 pips, then up 7 pips, and I just closed it. I mean, what a nightmare. Okay.
I think that was a good exit, because these comments, in line with the last few weeks, they're all being quite constructive. Sorry. So I stand by what I've said before. I think they're going to get there eventually.
No, they are, and let me show you the reason why I shorted the stupid thing yesterday. Anyway, so this is the daily chart. We stopped at the 127% extension, underside of this trend line, and I'm like, I'm willing to risk above this resistance right here at 127. You can see it's 127.20. I had my stops at like 127.25 or something. I almost got stopped out just a moment ago. I mean, when it spiked up to 127 or 147, I'm sorry, 147.03. I mean, that was within about 22 pips of my stop. I mean, for what? And I agree with you, Stelios. The overall news flow has been generally positive, and I have been trading the cable on the long side all week. This is actually the first time I've traded the pound yen in quite some time. I've been trading the cable on the long side all week and doing quite well with it. I made good money, I'll have to admit. But, you know, we were technically in some areas, and we actually started seeing a couple of negative UK headlines yesterday, but the pound rallied because of the weakness in the dollar, not so much the strength in the pound. And but overall, I do agree that the news stream that we're seeing is generally speaking pretty positive, but we've also seen a pretty good recovery in the cable too. So you know, I do believe though, and I'm going to actually put an alarm on this little line right here. If we take out this trend line, then I want to be short. Not necessarily the pound, maybe the pound, but I'll be short maybe the pound yen. You know, but that's what I'm going to do. I'm going to wait for that to get tripped. Okay. And thanks for the comments, Stelios. The dollar Canadian hasn't done a damn thing. There's an article that was just out, which I thought was really interesting. Mexico and U.S. threaten to exclude Canada if no deal reached by October 1st. It's very interesting because if for some, and you know, by the way, you know this is all happening. I'm going to ask you this, Stelios and Paulie. Are you guys here? Maybe even Steve. Who's here?
I'm here. I'm here.
Okay.
I just made it here, so
okay.
I haven't heard
no problem. I was just going to ask you guys a question. Do you think President Trump and Prime Minister Trudeau? Wait, is he Prime Minister? Yes.
Yes.
Okay, so Prime Minister Trudeau. Sorry, it's like getting the titles correct here, and it's Friday, and I'm really tired. And Trudeau, do you think they have a good relationship?
No, I wouldn't think so.
I think they hate each other. Actually, I think they despise each other. Matter of fact, I think if you're Trump, you're trying to get a NAFTA deal done before the midterm elections, right? I need to get my base rallied. I need to make sure that everybody knows that I'm doing some good, putting together deals. I'm a deal maker. I need to get the votes, because if I don't, the risk of me getting impeached is quite high after the midterm election. So I need to get this NAFTA deal done. If you're Trudeau, and remember, Trump has talked a lot of smack to Canada. Lots. And I'm sure Trudeau sits there and goes, man, you know, what a jerk, you know? And if you're Trudeau, wouldn't you be thinking, okay, if I just keep stalling this NAFTA deal that needs to get done, ultimately it needs to get done, but if I stall it until after November, you know, well, then maybe it weakens a chance of Trump, you know, of the midterm elections going the way of the Democrats. Therefore, Trump might get impeached. Then I can basically get back at Trump for talking all the smack for the last.
I agree with you 100%. Because all he does,
right?
if he does
Now,
the deal,
this article
all he does is giving him a gift wrap present.
Right. And so now you've got this article comes out, Canada prepared to play deadline spoiler in NAFTA talks, and Mexico and US threaten to exclude Canada. Well, yeah, I mean, if you're Trump, you're like, look, you're going to get excluded if you don't come to the table by October 1st. So you see the pressure coming in on both sides, from both sides of the border. You got Canada going, you know, maybe I'll just push this off until after November. And then, you know, U.S. going, well, look, if you don't do this now, you're going to get excluded forever. So this is the hardcore negotiating tactics that have everything to do with politics, but unfortunately affects everybody on an economic scale much greater than politics. So that's one of the reasons why I really, I don't like to talk politics. And if you guys are longtime listeners of this webinar, or back when I was doing the Morning Edge before I handed it over to Polly for all those years, I really don't like discussing politics because honestly I hate politics. Politics are all about egos, and unfortunately it affects all of us that live in this egocentric world, right? It is. And so now you've got a situation where you've got two countries, probably throwing, firing spitballs back and forth at each other, but it's really affecting the people, the Canadian people and the US people, especially the exporters, the importers from both countries, and it's intensifying, and it's probably because of the egos of two leaders of two world countries, which is really a shame. But
it's basically a game of chicken that involves 500 million people.
Exactly.
500 million people, and it's really sad.
It is sad, and so but this is what's happening, right? It's what it is. What it is. I mean, you've got Trump saying, thinking, hey, I got to get this deal done, and so this is how they're putting pressure on Canada. And then you got Canada saying, screw you, I'm going to make sure you get out of office. So we're not going to do a deal because of that. But really, when it boils down to it, that's probably what's at the gist of this whole thing, which is sad, isn't it? It's really sad. Oh my God, it's almost news time. Holy cow! Hold on. Sorry, we got to pay attention to retail sale. I don't even have any exposure right now, so that's why I'm not paying close attention. Hold on. Let's. Here we go. Where are we at? Where's my retail sales? Oh, there it is. Okay, retail sales. Here we go. Coming out, and I need to put on the dollar yen. We'll see the instant reaction right here. Looking retail sales 0.4%. Ooh, weak. Wow. Not a huge reaction in the dollar yen. The dollar yen came down a little bit, but revisions, look at the revisions. Huge revisions. Don't get too sucked into that. Look at the huge revisions. 0.9% versus 0.6% previously. Oh, yeah, the dollar is going to whip right back up again. So, interesting. All right. Well, I can honestly say, thank God I'm not trading right now. Thank God I'm not in any positions, because I'd be very frustrated. So the numbers came in a little weaker than expected, but huge revisions higher. So the dollar yen is catching a bid after originally selling off to 78. We're back at 85. You can see the euro dollar spiked up. It's coming right back down again. Pound's actually holding up pretty well because of all the comments from Chancellor Merkel. Aussie's weak. Oh my God, that's weak sauce. Look at that thing. That thing spiked up, and it's almost down to new trend lows. Kiwi not really performing that well. Canadian all over the map. Swissy. All right, I'm gonna pass it over to you guys. That's all I got is fart noises for you, because there's not a whole lot going on right now. Hello.
Okay. Couple weeks.
hey, there ain't a lot going on. You guys have fun with that. Talk to you guys later. TGIF.
Bye-bye, mate.
No, thanks, seriously. Good luck, everybody. Hey, TGIF, and thank you all for being here this week. Remember, make sure you join, or make sure you look into Forest Park FX. I mean, look, if I was an independent trader, which I'm not anymore, unfortunately. Well, no.
Fortunately.
Fortunately. But if I was an independent trader, I would be like, I would say, look, I trade a lot. Why am I not getting cash back rebates or getting reimbursed for my trading? Getting free Forex analytics if I could, or get some sort of cashback rebates. If that's something that you're interested in, talk to Forest Park FX. You can find their link right on our website. Their contact information is right at the bottom of the page. just go there. Steve will show you how to get there, and talk to him and see what your options are. One of our traders, JT, in our chat room, he's like, hey, I just got my first check from Forest Park FX, and that's the check that he gets is, getting a rebate back from trading because he trades enough liquidity where he can get a cashback refund. Why wouldn't you do that? I wish I would have done that and been able to. So anyway, guys, gals, I hope you have a wonderful, wonderful weekend, and I will be back. I'll be back Monday, and hopefully Dale will be back Monday too. Let's all hope he's recovering from his pneumonia. I'm going to reach out to him over the weekend. I'm going to give him a call. So I'm actually going to probably call him today. So.
Yeah, let's actually hope that he has a fast recovery.
All right.
Pneumonia is not, something to joke about. I mean, can get nasty. I'm sure he's going to be all right though.
Yeah.
So Blake, before you go, if you can give me a fast recap of what you talked about, because I came literally at the last second.
Really, I was talking about how I traded the euro yesterday, and I'm really unsure. And I was actually looking for, possible breakdown of the euro dollar, and cable got some positive news flows just a moment ago. And, the Aussie's trading really weak. It had a failed rally attempt yesterday. Canadian not really doing anything. So really just talk the majors. I haven't talked about any of the crosses. So aside from the pound yen.
So we'll focus mostly on those. Okay, thank you.
All right. Good luck, guys.
Bye-bye. Stelio, any questions that have gathered up so we can start from them?
We only have one so far, actually, and it's our friend Neeraj who's asking about the Indian rupee, and he was actually, you covered it last week, and he was actually looking for maybe if you can provide some support or resistance.
Yeah, let's start by having a look at the exotics, because I wanted to do that yesterday as well, but we had quite a lot of event risk, and then we're going to go back to more popular pairs. We usually do it oppositely. Now having to do with the USD INR, obviously a very big evening star formation, the one that we got midweek. So I would be looking lower, but let me make it clear, in the short term, right? This is a confirmed high that we had here. Just look at the RSI. But on the other hand, this is a big reversal formation. So I think this signals the beginning of a corrective move lower. Now, as I've said plenty of times, you can never be certain, like, how this move is going to play out. It might play like this, might be like a triangle. It might be something like more complicated, that takes a lot more time. But we need more price action to find out. But I would be extremely surprised if we saw higher prices like imminently. I think that at the very least, the pair is going to take some time correcting or consolidating. I would be looking for this area, the previous breakout area, to act as support initially. But even if we actually break below that, I think that then the 69 area is going to be very, very tough to crack. So, a correction lower, I doubt it's going to be easy making it lower than 69. So, if you're looking to do something with it, like in the short term, I mean, within the next few days, perhaps a couple of weeks, I think selling rallies is the preferred way to go. Now, let's have a look at a few more of the exotics, and then we're going to go like to yen pairs, etc. So, USD Turkish lira, if you remember, I was quite explicit about yesterday.
No, I was going to say we've been asked the dollar Mexico as well, so maybe you
sure.
cover that anyway.
Use the Turkish lira. You remember when we were trading here near these highs, I said that I doubted that we're going to push higher from there. I would be very, very surprised, and that the reward to risk ratio, like, said that being short is not a bad idea, because you had a very well defined reward to risk ratio. So we did see this move lower. We did see a very big move, specifically yesterday after the Turkish Central Bank hiking rates to 24% still, if I'm not mistaken.
That is correct. It was expected to hike to 21 and it hiked 300 base points more.
More, yeah, to 24%. So, you know, it's all about, you know, there was no question. The only way that Turkey could fight this, you know, this currency depreciation would be with, you know, either a recession or a complete destruction of the economy. I wish they could have done it earlier. There's no question about it. 24% central bank rates are definitely going to, you know, be a huge headwind to the economy. But at least, you know, they might avoid like having like a currency rout, and they might avoid, and they say might because if they had done it earlier, you know, the chances would have been a lot higher. Like huge problem with hyperinflation. Now, I guess we're going to find out, but regardless, I would expect that how it plays from here, either we stay in the triangle, or since they actually, you know, did a little bit more than expected, perhaps we're going to have another leg lower before moving higher. So I wouldn't be surprised if this is what happens if we don't actually keep consolidating. Okay, so quite clear about that. Bottom line, in the short term, I'm not looking for lower Turkish lira. Definitely not looking for it to break the lows. USDs are quite an orderly pullback. I think we had pinpointed this area as a double confluence of resistances because it was the 61.8 from the last move, from the big move that we had lower, and it was also the 127% extension of this move. So, you know, makes sense that we're seeing some kind of a pullback. I don't think it's impulsive in any way. So I think that we need to maintain a bullish bias in the medium term. Now, until we get a confirmation, obviously this correction can take some more time to unfold. So basically, the vast majority of the exotics, USD doesn't seem like it's ready to push to new highs, you know, anytime soon. Now, this is a nice example of what happens with triangles usually. This is the USD rubble. This is what you usually expect to see from triangles, meaning that A, you expect them to break in the direction of the trend, which is exactly what happened with the USD rubble. That's what I was expecting to see, and that's what happened. But on the other hand, very, very often, this last thrust that you see higher or lower from triangles, depends on, you know, what kind of a trend you have, it ends up being terminal. So we bridged through the triangle, we pushed all the way to the 50% feed of this big move lower that we had after that huge 2016 sell-off of the rubble. And, you know, we we tagged the 50% feed almost to the peak. We almost made it also to the ABC, like A equals C target, which would be a little bit above 71. And now we're pulling back. We penetrated through the previous triangle's resistance, so it didn't actually, you know, work as support. Bottom line, same deal here. I would be very, very careful being long the USD rubble. You know, at the very least, I would expect to see, you know, a more complex correction, if not a pullback, even quite lower from here, perhaps like, you know, 64. USD CNH. There's been a lot of discussion about what's going to happen with the Chinese yuan. We know how much it can affect the markets overall. I think that this is a triangle. I mean, we have a decent amount of price action so far to say that with, you know, not absolute certainty, obviously, but, you know, a decent amount of certainty. I would expect that that means that I would expect the next move would be to the upside. But as I was showing with the USD rubble, I would also expect that perhaps after seeing one more push higher, we would then end up seeing a deeper correction. So I wouldn't be short the USD CNH now, but I would be looking for opportunities after we pushed to new highs. Stelio, you talked about the USD MXN. We had a question about it, you said. This is exactly what we drew about the USD MXN. I haven't touched this drawing at all because I actually didn't need to. For those of you that are watching the webinar, you know that this has been here for a long time before I even left for vacation, I think. We expected that this breakout from this descending wedge is actually going to produce follow through. I expected that, you know, simply put, best case scenario, we would get like an ABC. That's exactly what we got. We got an ABC, almost a perfect ABC actually. We made it to the 50% fib. We're depreciating lower. I had actually pinpointed that as one of my favorite structures, being, I mean, very clean to read. So I would be extremely careful if I was long here, because I see the possibility of seeing quite a lot more weakness. So I wouldn't be surprised if we actually pushed lower, pushed below the previous low at 1840, and, you know, even below this expanding formation that you see for quite lower prices. So USD MXN, I think it's a sell on rallies than anything else. This is one of the reasons why I was also a little bit more careful with USD CAD. I remember we had this conversation here in the webinar. I was saying that, you know, I see USD MXN as a great opportunity to sell. On the other hand, USD CAD looked to me like a good opportunity to buy. But, you know, given the fact that those two have been very well correlated with each other, not amazingly, but, you know, decently correlated with each other, obviously looking to sell one and buy the other, you know, is a little bit of a dangerous proposition, perhaps playing the cross. I mean, like buying the MXN CAD or, you know, selling the CAD MXN, you know, depends on how you want to see it, would be the best way to play this kind of, you know, foreseen divergence. So, you know, not much has changed here. I mean, I'm definitely not bearish to use the CAD yet. Why? Because we still remain above this broken trend line support. Let me zoom out so you can see this blue one. On the other hand, you know, despite the recent sell-off, still this as a correction that completely lacks impulsive characteristics, right? So do I like the fact that the pair actually within this week like sold off substantially? No, I don't. It's not that I'm long to really care, but I mean, having to do with the bullish thesis, it does matter. But do I think that, you know, the bullish thesis is broken and it's mistaken? No, I don't. I think we need to see more price action. I think it might be a more complex correction, but I would still, if I had, you know, if I was forced to do something with it, you know, right here, right now, I would still be buying it. So it's, you know, that is that. I mean, not much has changed. Now, having to do with the USD NOK. Now, USD NOK pushed back down to 820. More or less, we were expecting that since we were trading here. So the question is, what happens from here? I think that 820 is going to, I mean, this level is quite critical. Anywhere between 1850, you see it's the 61.8 of the last leg higher, 820 horizontal support area. I think this is going to be the level that's going to tell us what's going to happen from here. Because if we actually do break below it, I think that we might see a lot more weakness. That wouldn't change my general thesis though, which is this is the USD NOK from a weekly perspective. First of all, you can notice that this week's candle is, you know, very bearish. There's no question about it. But on the other hand, no matter how bearish this candle ends up being, what remains to be true is that we've been in a very prolonged consolidation. Given the fact that we entered this consolidation after a very strong move higher, I would still believe that the possibility of this getting resolved to the upside is substantially higher than anything else. Obviously, though, if we do see more weakness, we might just end up pushing lower within this descending channel, and, you know, see more choppy price action in the long term before something happens. So 820, quite important. We are seeing a reaction so far from the market here. I think that if 820 breaks, we can easily see price trade back down at 8. let's have a look at the USD SEC as well. I was showing, I think it was the day before yesterday. Yes, early the day before yesterday, when we actually attacked the 50 DMA, I was showing in the chat room that be careful because USD SEC has currently reached a triple confluence of supports. You can see what this triple confluence of supports is. It's this ascending blue trend line support. It's this bull flags or potentially bull flags support. And you can see here the green line, that's the 50 simple daily moving average. So far, we're seeing a nice reaction. If we actually close anywhere above roughly 9005, that's going to be a morning star formation, which is like a bullish reversal. Also, so far, you can see that the correction lower has been overlapping, slow, choppy. So I would definitely not be selling USD SEC here, right? There's a good chance that we're going to see a nice reaction. There's even a good chance that we're actually going to break this channel to the upside and resume higher. So until proven otherwise, so until we actually breach through this confluence of supports and we see some momentum to the downside, I have to stick with you know, the bullish scenario and the possibility that this is going to just resume to the upside, given the fact that, you know, the data having to do with that are overwhelming. Now, let me see if I forgot any of the exotics. Actually, I think that's it more or less. Let me go through the metals and then we can go through some of the yen pairs or crosses. So silver. Silver got rejected yesterday exactly from this descending channel's resistance. You know, I've said it many times, I would want to see a reaction higher, and I do think that once a rebound starts unfolding, it can easily accelerate just due to people, you know, covering their short positions. CODs are at record shorts both for gold and silver. But so far, we haven't seen that kind of a move that could spark, you know, a short covering movement. So, you know, do I believe that sooner rather than later we're going to rebound higher? Absolutely. Do I believe that this has already started? No, I can't say that unless I see this, you know, this channel breaking the upside. Okay. I maintain my gold long position. I'm, you know, a little bit in the money. Gold has already broken above the equivalent channel, so it has that going on it in comparison to silver. But I do want to see finally some pickup in momentum. Okay, so I'm holding my position. I still believe that a push towards 1238 is quite likely. But you know, the first step would be to see an actual daily close above 1208. That's going to make me feel a lot more comfortable. Copper, nice rebound the day before yesterday. Has that, you know, changed something? No. Why? Because we remain within this triangle. So, you know, as long as we remain within this triangle and especially below this horizontal support resistance area at 274, let's say, you know, you have to respect the potential for more, for a bigger sell-off. Now let's have a look at palladium, and then we can have a look at platinum. Palladium's consolidation near the highs is ongoing. As I said, you know, this looks like bullish consolidation. The more we trade here without, you know, seeing a deeper correction, the higher the chances that the bulls will actually manage to break through and push higher once again. So palladium looks, you know, quite nicely positioned for another run higher. And this is platinum actually. Platinum is also making an attempt, but so far, you know, this can just be interpreted like another pennant, bear flag, you know, depends on how you read it. I would want to see this, those trend line resistances, all of them actually get taken out before I get more enthusiastic about it. But so far, we're finding resistance at the 50 DMA at the first descending trend line resistance, at this horizontal support resistance area. So, you know, so far nothing to see here. I mean, you have to maintain a bearish view. I would want to see probably a move above 820 to and some pickup in momentum to actually start feeling good about it. Keep in mind that platinum for a long period of time has been the most battered of the metals. Still, you remember for a huge period of time, historically speaking, platinum was trading at a premium in comparison to gold, right? And now we have the exact opposite situation. I haven't actually. I don't think I've mentioned that. I don't remember if I've mentioned that. You know that platinum is actually not used in jewelry, right? It's not white gold.
No, it's not like gold, but it is used in jewelry. Like I have a platinum wedding band, but
no, it's not.
The usage is much less than gold.
No, that's gold. What you have is gold.
Is it?
They do a special processing either for pink gold or white gold. Up until some time ago, I also thought that was actually platinum, but I found out speaking to a guy that has a jewelry that that's not the case. They use gold for everything, and they mix it with some pre-made like mixtures, which I don't even remember what kind of metals they have that give either the distinctive white color or a pink color. And he was adamant about it. He was quite clear. They do not use platinum at all. Stelio?
I'm here. Sorry. Yeah, no, you're right, and I have to go and have a word with my jeweler then, because he's being platinum. No? Anyway, okay. Interesting.
Yeah.
Okay.
Let me mention one more thing. I was saying yesterday specifically that 111.50 has been acting as resistance multiple times, but I really see this as a pair that wants to break higher. We've already seen this move in the USD yen. I tend to trust it. I mean, my feeling was telling me that USD yen is actually finally going to break to the upside. We are seeing this move. I don't see any real reason why it's not going to make it at least back towards this high, like 13.20. So I think that, first of all, I wouldn't be trading it because, as I said, it's choppy like hell. I mean, it's a nightmare. But I think there's a clear bias, at least in the short term, and that's higher. So that is that. Now, having to do with the DXY, quite an important move lower here. I mean, we broke below this ascending trend line support, and I do believe that we should see more dollar weakness in general. So I would expect that the DXY, I don't know now if it's first going to extend some kind of a corrective move. I mean, it might behave in various different ways, but even if it doesn't break down now, I would expect that there is at least one more leg lower before considering seeing some strength again in this market. So personally speaking, and I know that a lot of the currencies we've been monitoring look like they're weak against the dollar today. So for example, earlier today, the cable, the euro were pushing higher, and now they're actually negative on the day. But that doesn't change my thesis that much. So I would still expect them to do well for at least a short period of time to follow. So next week, for example. Now we were talking about the USD Swiss. USD Swiss is testing the 96.50 area once again. I think it's actually going to break it, very shortly. I would expect to see one more low before anything else. Stelio, we had your friend.
I was about to say Sorry.
Yeah.
Have a look at that, and also before we wrap up, can we also have a look at oil? Our friend Mohammed is asking, and
absolutely,
it's probably a nice one. Thank you for looking. Thank you.
Shanghai Composite. Listen, first of all, I don't like this structure having to do with being bullish, because this looked like a very, very corrective move. The fact that we broke lower makes 100% sense, because just compare how little time it took to sell off from there to the lows, and then it took like double the time to retrace, not even 50%. So whenever you see something like that, you expect that there is more downside, or if the trend was oppositely, more upside, and this is exactly what we got. Now, there is only one bullish interpretation here, which is not unlikely at all, at least in the short to medium term, and it's the following. First of all, let me zoom out. As you see, we're testing a zone that has acted as support resistance, quite a few times. Second of all, there is a decent chance that this is a descending wedge. Now, is it certain? No, it's not, because perhaps this is a flat bottom triangle, because it depends on if you want to take this low into account or whatever. But one thing is for sure, you don't want to see the index really break below like 2600, because then I think it's it might even accelerate to the downside. Now, on the other hand, if we do see a move above, let's say 2730, I think that there is a decent chance to see like quite a nice recovery. So I would be closely monitoring this. It might actually produce a very nice rebound, but as I said, you have to respect that we are in a bearish trend. So don't let this run against you. I mean, you want to be long, I see why, but then don't just, if it actually starts breaking down, don't just go with praying and hoping that it's going to reverse from lower, because I think that if we make it through this zone, it's not going to reverse for some time following that. So that's what I think about the Shanghai Composite Index. And let's have a look at crude.
Thanks for that, Steve. Maybe crude as well, and we wrap it up.
Absolutely. Now, crude, one more rejection from the exact same. I mean, look at the manner that we got rejected, the exact same one. I mean, we were looking like we're finally going to break above 70, and I mean close above 70 on the daily. We didn't. We reversed once again. What followed was quite a bearish day. So as long as we don't clear this $70 resistance area on a daily closing basis, I think that it's a coin toss, because there is the potential that this move higher is a corrective move of the first leg lower, which is a bigger correction. So let me be clear. In the medium to long term, I'm looking for higher prices. Now the question is the correction from the 75 level over or not? I think that, seeing a daily close above 70 is going to be a very good indicator about that. So far, we haven't seen that. So, despite being bullish in the medium to long term, I have to leave open the possibility that there is more downside before that happens. So, I need more price action to tell, but I wouldn't be buying, after getting rejected once again from here, right? So I actually think that from a reward to risk perspective, being short here, knowing exactly where your stop loss is, like above 71.30, would make more sense if I wanted to do something in the short term. But I'd rather wait more. I would rather wait more. I made money being short on the previous leg. I don't want to chase this one, because it's likely going to be the last leg lower before seeing like a bigger move to the upside. So what I would ideally want to see is hopefully see another move to the downside, and then see momentum stalling and some nice reversal. Then I would be more than willing to participate, this time being long crude. So that's my general plan about it. So thank you all for being with us for this week. We had quite a lot of an event risk. As always, we will be sending out updates, alerts, and we're going to be in the chat room. And have a lovely weekend, and we'll see you again on Monday. Thank you very much, Blake and Stelio and Polly.
Thank you, Steve. Thank you very much.